One of the things that happens is that if it's common sense, but it's not true, that people think if I want the most amount of money, I ask a lot of money, right? But actually, by overpricing a listing, what you do is you cause it to not sell and become stale, right? I believe that a home is most valuable on day one, and then day two, and day three. The longer it sits on the market, the less interest or maybe I've got to get it, right? From the buyer. And so when you overprice, the only way to fix that isn't just to go to where you should have gone, it's actually to go lower than where you should have gone. So overpricing actually doesn't make you more money, it costs you a lot of money.
And not to mention, let's face it, a lot of the market, probably 75-80% of the marketplace, is mortgage finance dependent.
Sure.
And I think we can both agree that typically a seller's highest price point or the best price they usually get is through a financed offer, which in turn has an appraisal. So that's an interesting thing to also contend with.
It is, and sellers always say, well, just bring me one of those cash international buyers. First of all, cash international buyers are very savvy.
Sure.
So they're going to look at what has sold, right? But even if they fall in love with it, like you said, often the better offer is that financing deal. Now, 70%, do we really want to lose 70% of all the buyers? No, we don't. We want top dollar. That means that odds are we're going to have maybe a cash offer, but we're definitely going to have some finance deals in the mix to consider.
Right. And I think how we work so well together is also deciphering the terms. Price point is so important, of course, for sellers. But when you're in that multiple offer situation, which I think you're still in a lot of different ways, now it also comes down to what are the terms within the contract. And I love how you really go through that in detail with your sellers.